All right. So hello and welcome to today's session of with our efforts to help NGOs. The Atma Network uses the webinar series as a platform through which subject matter experts help organizations with best practices so you can manage your NGOs more effectively and impactfully. For some of you who are attending our webinar for the first time, Atma is an accelerator for educational NGOs. We work with organizations for a period of 3 years to build their capacity and make them sustainable and scalable. In the past 10 years, we have worked with over 65 NGOs in Mumbai and Pune. I am happy to announce that we have opened the round of application for the accelerator program this year. We are looking for organizations that are registered, are working in the field of education, catering to a low-income beneficiary group, are located in Mumbai, Navi Mumbai, or Thane, have a strong program, and are looking to scale. We are kindly requesting you to refer us organizations that fit into these eligibility criteria. Post the webinar, we will be sharing the application details that you can circulate within your networks. So today we are going to address a topic that is chosen through a popular demand, GST. Yeah, GST and its implications on NGOs. And to enlighten us about this very essential topic, we have two very experienced and enterprising speakers with us, Suhail Goel and Dhaval Kodilkar, who both are from the firm Sunil Goel and Associates. Suhail is a senior partner at the firm, is a fellow chartered accountant, and an expert on cross-border transactions and foreign investments. He also advises NGOs on FEMA, and that is the Foreign Exchange Management Act, and the FCRA matters, and on structuring of the organization from complexity, which is compliance focus. Dhaval oversees the firm's Mumbai operations and is also taxation and FCRA expert. His portfolio consists of a number of local NGOs, including existing partners from Atma Network. But before we head on to the session, let's recap a few basic rules. All attendees are requested to stay in the listen-only mode. Please mute your microphones so that we can minimize any audio disturbances. Any questions you may have will be taken up in our Q&A section towards the end of the webinar. So please type your questions in the chat box that you see on your screen, and do keep the questions coming. A topic like GST will be better understood if attendees raise specific challenges that you or your organization is facing pertaining to this topic. And last but not the least, after this session, we will mail all the attendees a presentation that you will see today and any other additional resources relevant to this topic. So, well, that's it for me. Over to you, Suhail.
Thank you, Vinita, for the wonderful introduction. And firstly, thank you everyone for taking out the time to be part of this webinar today. Before I move in ahead, can I just do a quick check to confirm that everyone can hear me and we are audible without any echo or any background noises, please? Sure, thank you for the confirmation. Before we proceed, or just on the lighter note, we wanted to highlight that GST is a topic where none of us could really be called as experts. We're all learning the provisions every single day, and pardon us for any oversights which might come through with considering this is such an evolving legislation and the fact that there are changes which are happening at every GST council. So what we might be discussing today may not necessarily be the law 3 months from now or 6 months from now. So we always advise all our set of clients that whenever they are doing anything relating to GST, it's imperative to cross-check what are the provisions which are prevalent as on the date of that transaction. And do keep in mind that since this is a evolving legislations, you do need expert advice from time to time, and what is relevant today may not be the law henceforth. So that's just a quick disclaimer come rider that we wanted to highlight. On the call today, it is myself from Sunil Goen Associates, as well as my colleague Dhaval. We'll try and run you through a few things which would talk about the background of how the legislation came through, what are the important terms that you need to be aware of, and towards the end, try and pick up some common questions as well as some common areas where most people tend to have some queries. And if there are any remaining queries still, we'd be more than happy to address them during the Q&A session. So what we're covering today, as I mentioned, is going to be the following areas. I would strongly recommend that you do stay right till the end in this webinar, especially with the advanced rulings and some important cases that we've brought up for reference. A few of these would cover situations with any of your firms would have already gone through. So it's our request to attend the entire duration of the webinar. At the outset, to clarify how the GST legislation is different from the erstwhile provisions, GST is obviously a system of indirect taxation where over the last 50 years, there was a mix of a number of state as well as central legislations governing indirect tax. And any of you who've worked in the erstwhile regime would have appreciated that there were so many different laws and statutes governing different offices of the same entity, as well as having different timelines for filing, rules, forms, as well as compliance requirements. And it used to be a cumbersome task to maintain multiple offices for the same entity. With that history, it took us virtually about 15 years from the first time the GST legislation was introduced by the earlier regimes. And finally, this was passed and brought into effect from the 1st of July 2017. It is still a very young legislation, which is evolving and is changing from time to time. In terms of the concept, the GST is a destination-based tax on consumption of goods and services. It seems like a fairly complicated terminology, but in simple words, what it really means is that as compared to the earlier regime, where the origin of the service or goods determined whether the taxable element would be in that state, now the change is brought about. The GST legislation is a destination based, which means where the goods or services are finally consumed. So what is very important to understand is that if you're transacting between, let's say, Maharashtra and the state of Uttar Pradesh, earlier the taxation arose in the state of Maharashtra, whether it was VAT or it was the erstwhile service tax provisions, or even the state-specific laws, which are excise, etc. Under the GST regimes, Uttar Pradesh, which is the state in which the goods are finally being consumed, will actually have a right to have the taxation within its purview. So that's one of the fundamental things to understand. The other thing important to understand is that GST, unlike the earlier regimes, subsumed a majority of the taxes and is levied on every value addition. So unlike the earlier laws where there was a loss of taxation in between, under GST, the subsequent provider of service or goods gets the credit of the previous transaction, and therefore it's only a net addition which will determine the tax liability. Some of these terms might be complicated. We've used simpler terminologies and examples in the next few slides, so stay along. These would be common terms that we'd be using across the next few slides. To give you a context, the CGST, IGST, UTGST, and the SGST Act are the different statutes which were created. The origins of this goes back to the federal system of India, where the central government, being at the highest level, administers the countrywide taxation, while each of the states also have a right to tax. To overcome this federal system, the government finally came through with these multiple acts. The CGST would cover any intra-state, which means a supply within a specific state, and is levied by the central government. The IGST is a levy by the central government on interstate supply of goods and services, while the UTGST and the SGST are intrastate supply of goods or services within that specific union territory or the state government. So it's important to keep in mind the meaning of each of these statutes and what kind of transaction would be governed by what kind of legislation highlighted here. GST, like for any of us, is still quite a question mark. All of us are still wondering what's really the meaning and the genesis and how it really works. What we've tried to do in this particular slide is to give you an illustration of exactly how GST works. For the sake of the illustration, we've assumed GST to be at 5%. GST rates, I'm sure you would understand there are different rates which are prevalent, but for the sake of this illustration, we're using 5% as an example. To assume from the first stage, we look at a scenario where a person sells raw material to a manufacturer and say the sales price of that is 100 rupees. The GST chargeable on that would obviously be 5. At the second stage, the manufacturer makes the product and sells it to the wholesaler for 200 rupees. 5% of 200 would be the rupees 10 GST that he needs to charge. And he would get an input credit of the 5 rupees he pays at the first stage. Similarly, at the third stage, whenever there is an increase in value and the increase goes up to 300, the output liability 15 would get reduced by the input credit of both of the first and the second stage put together, which means rupees 10. And then finally, at the fourth stage, when the actual consumer buys the goods from the retailer, out of the total GST of 20 rupees, 15 is the input credit, and the additional 5 rupees is what the government gets. So if you add up each of those items, the total GST is 20, which is also the GST at which the consumer has paid, but at each incremental stage, there is an offset of the earlier credit from a previous purchase, and therefore it goes back to the basic principle that each supplier is entitled to full right to deduction of the input taxes, and there is no cascading tax burden, which was there with the multitude of taxes which were there earlier. I'm just seeing a few messages where you're saying that some of your connections are not clear. I'm assuming that most of you can hear me correctly, and that's why I'm proceeding ahead. Going into the most fundamental discussion of today, which is, should GST be charged by charitable organizations for the goods and services supplied by them? To clarify, the two important limbs of this bit is the meaning of goods and services, which we need to understand, and finally, the meaning of supply. Both of these terms is what will finally determine how and why we would go ahead and determine the taxability of each transaction. The definition of goods as per Section 2, subsection 52 of the CGST Act is stated herein. I wouldn't want to read through verbatim, but what you need to understand is it's a very wide and inclusive definition, and is much larger in terms of what it covers as compared to the earlier VAT and excise provisions. Similarly, the Section 2, subsection 102 defines services. And again, with services, the definition has been significantly widened as compared to what it was under the erstwhile service tax provisions. The genesis of both of these definitions is the fact that the government wanted to overcome the legislative provisions which have come through for the last several years, where there has been a lot of litigation in terms of what does goods mean and what do services mean, and the whole interpretation of that. In this, since the definition is extremely wide, the hope and the intent was that the legislative intent of reducing the litigation would be met by having such a wide definition. The other part of the discussion is the meaning of supply. What you need to understand is the word supply is an inclusive definition, and the legislative intent has stated the supply includes all forms of supply of goods and services, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of a business. It's important to understand that the word used is supply and not necessarily sale. So, in the context of charitable organizations where you may not necessarily be selling items, but the mere fact that you are supplying certain goods or services to the recipient would get you covered within this definition. In the next few slides, we're going to be talking about the 4 bits in terms of what is exempt and what is taxable. In the scenario where you are covered as a taxable entity, how would you go ahead for registration of GST, the levy of the provisions, and finally, what are the returns which would need to be filed from time to time. We've tried to simplify the definition to the extent we could. What you need to look at is the fundamental notification. Under the GST provisions, it wasn't extremely clear what are the different ways of the exemptions which have come through. What we've tried to do here is that there is a master exemption notification which was introduced in the year 2017, notification number 12/2017. What it basically said was the following are the exempted services provided by an NGO, which is services by an NGO by way of conduct of any religious ceremony. The other aspect would be renting of precincts of a religious space meant for general public. And there are obviously some additional criteria which we're not going into at this stage. What we're focusing at this stage is primarily going to be this bit, which means services by an entity registered under the section or coaching of in recreational activities or sports, as well as arts and culture. Sorry, just to repeat, I'm just going to skip through the exempted services of the NGOs as listed here. These are within the notification 9 of 2017 and notification 14 of 2018. These are not relevant to everyone, so we're not spending too much time on it, but you might want to refer these back later. I think personally, this is the most important slide of the entire presentation. What you need to fundamentally appreciate as compared to the earlier legislation is that to be exempt under GST, you must satisfy both of the following criteria, which means the entity must be registered under the provisions of the Income Tax Act, which means that you're registered as a Section 12AA entity under the tax provisions, and you must also be providing a charitable activity. The definition of the charitable activity is something which has been listed here. This is a fairly restricted definition as compared to the earlier provisions under service tax or any other legislative provisions which have come through. To clarify, only the following four activities are covered as a charitable activity, which means either a service which is in the nature of activities relating to public health by way of care or counseling of the following category of persons: public awareness of preventive health, family planning or prevention of HIV infection, advancement of religion, spirituality, or yoga. And most of us might be covered under the fourth limb, which is advancement of educational programs or skill development. However, this is not an open-ended definition, and it gets restricted when these services are provided in relation to abandoned, orphaned, or homeless children, physically or mentally abused and traumatized persons, prisoners, or persons over the age of 65 years residing in a rural area. I would once again request that all of you appreciate that this is a restricted definition where education provided to the following criteria, for the following categories of persons is what is covered. Uh, the last is the preservation of environment, including watershed, forest, and wildlife. Once again, to repeat and re-emphasize, charitable activities mean only the following things which have been mentioned right here. Do not make the mistake of assuming that charitable activities is the English definition, and therefore anything which is provided as a charitable activity would be exempt from GST. Another important thing for you to appreciate is the fact that whether donations received are covered under GST or not. That's obviously one of the most important and the most obvious questions which a lot of you would have. We've tried to analyze this in three parts. The definition of goods and services is ideally wide enough to cover a majority of activities carried out by NGOs. However, since a donation cannot be treated as a consideration, there being no relationship between the donor and the beneficiary, therefore the donation doesn't partake the character of a consideration, and the definition is mentioned here and below. Even though, as I alluded to earlier, the words used where the business includes certain aspects, whether or not it is for a pecuniary benefit, and therefore the definition, although is wide enough to include the charitable activities, but because a donation does not have a consideration attached to some of the other activities by charitable organizations which you need to appreciate is a charitable activity, or rather a charitable trust, which is conducting training programs, yoga camps, or other programs that are free for participants. It will be considered as a commercial activity and held, rather, to clarify, such programs which are not free and where there is a consideration which will be charged, they will be covered as a commercial activity and hence liable for GST. For health services, wherever any services are provided by way of transportation of a patient in an ambulance, other than by a clinical establishment, an authorized medical practitioner or paramedics, this kind of a situation will not be covered under GST and will have to be looked at separately. Services of public conveniences, services which are in the nature of provision of facilities of bathroom, washrooms, lavatories, so and so, are exempt from GST. And then finally, in the case of libraries, where it is the case of a public library which is open to all and anyone and everyone can walk in and use the services of that public library, whether in the nature of lending, publications, or any other knowledge enhancing content which is available, such a case of a public library would be exempt under GST. In terms of the educational services specifically, we wanted to bring up this slide to look after most situations where if there are services which are provided, what are the cases of an educational institution which are exempt? The bits which are listed here and below, the services which are by an education institution to its students, faculty, and staff, these are exempt from GST. Similarly, any education institution which conducts entrance examinations against consideration is also exempt from GST. And then finally, any services which are provided to an education institution. And I repeat, the third part is services provided to an education institution in the following criteria. All of these would be exempted from the levy of a GST. And obviously, there are some additional clauses which are applied in terms of what is covered and what are the different provisos. Some of the other common situations which are foreseen are the canteen services, where an education institute itself provides a canteen services. It does not attract GST. However, if they are supplied through a contractor, a reduced rate of 5% is chargeable. Similarly, if a hostel accommodation is part of a service provided to students, on such charges, GST is not payable. While there are obviously different situations where there are the services provided by the higher institutes, including the Indian Institutes of Management. Another thing to clarify is that placement services are not exempt from GST. They will always be chargeable, and this is a common error which we come across when we're consulting a number of our clients. There are the other category of services as well, which at times are exempted. These are primarily relating to those which are either with a government involvement or being provided by the government themselves. Similarly, on this side, most of these are those which are in the public sector and require governmental support or provided by the government themselves. Another important thing that we wanted to highlight is the fact that any of the other services which are provided by a charitable trust, which are not within the meaning of the educational services, they will fall under the definition of supply, and unless they are specifically exempted, they will attract GST, and it is imperative for you to understand what are the different services you're providing and whether they get covered within the different exemptions. And lastly, on this bit, any goods which are sold by a charitable trust, other than those which are specifically exempted, will also be liable to GST. Moving into the requirements for registration, although it's slightly complicated in terms of the slide, but just to simplify it, what you need to be careful is what is the total threshold in terms of the value of services that you're providing. If I move over to the beginning, the first box which is there, every supplier shall be liable to be registered in every state or union territory from where he makes a taxable supply of goods or services if his aggregate turnover in a financial year exceeds rupees 20 lakh in states other than the specified category for other than exclusive supply of goods, and rupees 40 lakh in case of those engaged in the exclusive supply of goods. What is imperative to understand is the higher limit of 20 lakhs is only applicable when it's an exclusive supply of goods. you may not mistake the fact that it's a uniform enhancement of the limit, whereas it is restricted in terms of nature, while in certain specific category of states, which are primarily the Northeast and certain other rural parts of the country, the limits of 20 lakhs have been reduced to 10 lakhs, requiring registration. There are also the other situations where you're obliged to take registrations mentioned in boxes 2, 3, and 4. What we just want to highlight is specifically, even though your turnover may not be exceeding the thresholds mentioned here, but in case you are following within any of these 4 situations, you might still be obliged to seek registration. This was the scenario again, reverse charge. That's a common terminology that you might have heard. In simplistic terms, in reverse charge, what it really means is that the onus to charge GST has been shifted by the government to the recipient of the service, which means, as an example, if you are taking certain services from a lawyer, services of a lawyer are covered under a reverse charge mechanism. And even though the lawyer will not actually charge you GST on his invoice, what is important is for you to look at registering yourself under the reverse charge mechanism. And therefore, the onus and responsibility on such a situation would be on the recipient of services, which means the non-profit entity. And again, there is a list of such situations where reverse charge would be applicable, defined under Section 9.3 and 9.4 of the CGST Act. In terms of the levy of the GST, what we just want to clarify is the different components. Whenever there is an intra-state supply of goods or services, there will be a combination of CGST and SGST or UTGST, as the case may be. To give you an example, if there is a supply within the state of Maharashtra and you are buying something, let's say for value of rupees 1 lakh, on that, the GST levy to be 18%. Then 9,000 rupees, which is 9%, will be the CGST element, and 9% being 9,000 rupees would also be the SGST element. The reason both of these are bifurcated goes back to the federal structure of India, where the component of CGST goes to the central government, while the component of the SGST goes to the respective state in which the supply is happening. While in the case of an interstate supply, and let's continue with the same example, where the state of Maharashtra is supplying to the state of Uttar Pradesh for the same value of 1 lakh rupees, 18% will be a consolidated charge under the IGST, which will be a combination of CGST and SGST. However, this will not be separately mentioned. It would be mentioned as 18% IGST, unlike the intrastate supply, which is bifurcated into 2 parts. I wouldn't want to spend too much time on the provisions of returns. This is a topic which is most likely going to see substantial simplification in the upcoming union budgets, as well as provisions relating to the next GST Council. At this stage, what you need to be providing is certain monthly returns of the services you have provided or the goods which you have sold. There are the annual returns which are applicable as well, and there are the other returns which may not be the most relevant at this stage. Also, for the sake of simplicity, we've tried to highlight what are the different categories of return. I'd like to keep our attention to the first 2, which means GSTR1 and GSTR3B. GSTR1 is the details of outward supplies which needs to be filed by each taxable person. The GSTR3B is the monthly return on the basis of which the outward supply, inward supplies are being computed and needs to be filed. Again, the dates which are mentioned here keep going change, and they are being extended from time to time. And at different points of time whenever there is a difficulty. So do not necessarily treat these dates as fixed. It's important that you keep a track of what are the new changes and relaxations which are coming from time to time. And the other return which I'd like your attention on is the GSTR 9, which is the annual return which needs to be filed. The most important definition, the difference rather in the definition was highlighted in yellow in this slide. We wanted to emphasize that the difference between the earlier service tax provisions and GST was primarily along the item 5 of the service tax definition of charitable activities. This does not find place in the GST provisions since this is not available here. Therefore, the definition gets restricted to only those items which are covered within these 1 to 4, and therefore any other activity or general public utility is not exempted from GST. I would now hand over the presentation to my colleague Dhaval, who will run you through some relevant changes and important rulings which have come forth in the recent past. Dhaval, over to you.
Yeah, thank you so much. So there are recent rulings since the GST has come in, and there are various rulings which will be very important to understand the exact impact of GST on the charitable activities and the NGOs. So, so let's start with one of the first advanced ruling which came in the BC Examinations and English Service India Private Limited. So wherein the applicant was providing an exam support services and the student facilitation services to the British Council UK. So in respect of the international English language testing system, so it was held that the activity involved in exam support services constitute a composite supply, and since the principal supply is conducting of test exams, it's covered under the service code, and hence that is a taxable supply of service. So any of the educational institute, if they're providing exam support services to any colleges or institutes, so that will be taxable as well. So again, and one of the other ruling in Rajendra Shukla, so it was stated that the private coaching classes are also subject to GST, and if you are providing any private coaching to the students, so that will also be chargeable to GST. Then there is one more case in the education and technology services, wherein it has been ruled that the implementation of information and communication project in government and the other aided schools are also a taxable supply, and hence this is not an exempt service as well. So in one more ruling case which came for the hostel accommodation, which we have discussed previously, even this service do not fall under the ambit of the charitable activities definition as we discussed. So hence the hostel accommodation services are also chargeable to GST. So there are a few another judgments which came, which is specific, one of which is in the state of Maharashtra. So let's discuss that in detail. So in this case, there was services which are provided by a charitable trust, which was in respect of spreading religious knowledge by organizing some camps, then its ancillary activities of selling religious materials in the form of books, CDs, DVDs, etc. So even this was considered as a GST taxable activity, and the GST was chargeable on this as well. So this is very popular topic amongst the NGOs who are raising funds through the conducting some marathons or through conducting some events. So even this type of services are also not a charitable activity, and these are also chargeable to GST as provided by the AAR in the case of Dream Runners Foundation. So in this trust was also providing the services in respect of organizing a marathon, and whatever the funds that they were raising through sell of those tickets. So on those also the GST is chargeable. So let's move to the question and answers round now. I guess a lot of people, you have already posted some questions, so we'll take the questions one by one in the limited time that we have.
Vanita, would you like to moderate the question and answer sessions now? Thank you.
Thank you so much, Suhail and Dhaval. It was quite informative. We have like a lot of questions that came in throughout the webinar. I'm going to be publishing it on the screen itself, so you can look at it and answer it as well. Yeah. Um, Okay, so the first question is that as per the CSR Act, corporate is supposed to have structured programs for donation, making the NGOs to sign on a MOU or a document. In this MOU, sometimes the activity is termed in a way that it sounds like we are service provider. Does signing such MOU make us liable for GST? This is asked by Hina.
Hina, that's a very important question that you bring up. It's a question of substance over form. So the wordings used are not really the determinant of whether you're covered or liable under GST. But what you need to be looking at is going back to the fundamental, whether the activity being provided is covered as an exemption or under the charitable activity clause. So if you are providing a services which gets covered, you would continue to remain exempt from GST. However, if those activities are outside the purview, you are most likely going to be liable for GST.
Thank you, Suhail. I'm going to take the next question. What about the management fees, if any, or overhead costs as percentage of overall project value? Are they under GST?
Again, Hina, it will be hard to answer this question unless we get full context. Management fee is only an allocation of the cost. It's not really a charge. In our past experience, what we normally see is that out of the total cost of a project, let's say ₹1,00,000, there would be some element which is attributed to the management fee. Just by that attribution, it does not get covered under GST. Again, depends on what the management fee is for and what is the activity which is being ultimately provided for which the management fee is being charged.
Hina, does that answer your question? We'll move on to the next question from Priyank. It says, will donation received amount to turnover?
Priyank, since donation does not satisfy the criteria itself of a supply, and since it is not a consideration, since it rather does not have consideration, it does not enter the provisions of GST itself, and therefore the turnover will not include the donation. However, it's important to also understand what is the donation towards, what is the manner in which that donation, is it a donation simpliciter, or is it donation attracting certain conditions and for certain specific projects for which there might be a reciprocal obligation. So again, these are fact specific questions best addressed when we know the complete details.
The next question is, if a musical concert is held by NGO as fundraiser and if donor passes are sold for attending the concert, is GST applicable on donation passes or tickets? Cost of donor pass is more than 1,000.
Dhaval, would you like to address this?
Yeah. So Arvind, as we discussed, that if there is any event which has been conducted by any NGO and the funds have been raised from the tickets which are sold by that NGO, so as already there are some rulings for addressing this issue. So based on those rulings, so even there are GST is applicable on these types of tickets which have been sold.
But just to complete the point, Arvind, still look after the threshold exemption, which is always available. So keep that threshold exemption in mind when you're looking at calculating the applicability of GST.
All right. Moving on to the next question, which is sponsorship received from corporate is taxable. Is the same question as donation received amount to turnover? What's the difference?
It's actually a very fundamental difference. Sponsorship service is covered under the terminology of reverse charge, which is what we were talking about slightly earlier. A reverse charge situation would mean that the corporate is responsible for paying the GST.
And is it taxable for the organization?
No, so this question, the GST implications are entirely in the hand of the corporate, since this is a reverse charge situation.
Okay. We'll take the next question. What is TDS on GST, which is deducted by another party for services? By Darshana.
So Darshana, there are few tax registered dealers who are required to deduct the TDS on the GST, which includes the government agencies and other government authorities. So whatever the payments that they are going to make, if that is in excess of 2.5 lakhs, so there will be a TDS which needs to be deducted on that amount as well. So in most of the cases, this won't be applicable in case of an NGOs.
Another question from Parul is NGO providing some material kits to BMC students. Are they chargeable to GST?
So Parul,
Again,
again, we need to have detailed information regarding what type of material kits have been provided to the BMC students. If it's provided to the BMC schools or any aided funds or any under any government scheme. So maybe what you can do, you can write the detailed facts of the case to us, and maybe we can revert to you on a mail.
All right. Grants received from one NGO to another NGO, is it chargeable?
Parul, again, if it's a donation given to by the one NGO to another NGO, then it is not chargeable to GST. But if it is in terms of a fee or any membership fee, if it is provided to any another NGO, then that will be chargeable to the GST.
Dharmendra has asked, is it necessary to get GST certificate for newly registered trust?
Dharmendra, no, there is no as such requirement unless your activities are exceeding the threshold limit under GST, which are chargeable to tax. So otherwise, you don't need to get GST certificate straight away for your newly registered trust.
As you said, GST is only applied when consideration takes place. Any exceptions you would like to highlight?
However, the fundamental exception was the simple receipt of a donation, which is the most obvious situation where there is no reciprocal obligation by the recipient of the grant to perform anything for the donor. So the most obvious and the most common exception would be a donation simpliciter.
Okay, so we see that there are a lot of questions coming in, and we are already uh, in time for finishing the webinar. Can we take 5 more questions, Dhaval and Suhail?
Sure, I mean, happy to extend by a couple of minutes.
Sure. All right. Okay, so next question is, are provisions of relief and response in terms of health camps, relief support and recovery of health centers covered under GST?
So, Hina, if these services are being provided by a clinical establishment or any authorized medical practitioner, so in that case only it is not chargeable to GST. In all other cases, it will be chargeable to GST.
Alright. Parul has a follow-up question for which you asked for more information. The materials that has to be given to BMC school. She's mentioned BMC school like soaps and shampoos and etc.
So, Parul, your question is basically you're saying that your NGO is providing the soaps and shampoo, etc., to the BMC school. So, is that what you want to say?
Yeah. She's saying that if these materials are provided to BMC schools, are they coming under the GST?
No, but are those provided for free of cost, right?
We'll wait for her response. We'll go on to the next question. Training provided to staff and documentation charges to lawyer applicable for GST.
Parul, any payments whatsoever to any lawyer under whatever manner is case covered under reverse charge for GST. So the nature of payment is irrelevant. It depends on what is the recipient of those payments, in which case, since it's a lawyer, they would be covered under reverse charge. And therefore, GST obligation is on the non-profit entity.
Shreya has another question. The specific conditions you mentioned to be considered as a charitable organization that is exempt from paying GST, are they the same conditions for being considered for 12A registration?
Shreya, unfortunately, they are absolutely different. There might be some commonality in some of the clauses, but principally GST and 12AA registrations are two absolutely independent provisions, and you must look at the conditions separately for both of them.
All right, we'll take one last question from Bhumika, but it's an incomplete question. See if it makes sense. Should we charge GST on out-of-pocket expenditure?
So, Bhumika,
Uh,
it depends on the exact nature of the out-of-pocket expense that you're saying. If the expense has been reimbursed to the person who has expended it, and if that is on a pure aging basis, then there won't be any GST. But if there is an income element in the out-of-pocket expenses, then the GST will be leviable.
Just to add to Dhaval's point, Bhumika, what he's trying to basically say is that if you are simply taking a reimbursement of something which was the liability of the other party to pay, and to give you as an example, if there was, let's say, a duty or a tax or some element which you were obliged to pay of the other person, it could be, let's say, an airline ticket, anything that you have incurred, but the original liability was of the payer. Only in those situations will you be outside the purview of GST. But in most cases, and you can take it, let's say 90% of the times, out of pocket expenses in the nature of traveling, conveyance, or any other food, etc. reimbursements, they will be subjected to GST, provided you are overall within the limits of charging GST and the service you're providing is not exempted.
Thank you so much, Suhail and Dhaval. I think we'll stop at that. That was very well informative and helpful. I'm sure this session has managed to address a lot of questions that these NGOs have around GST. And as we have mentioned earlier, please feel free to email us with any questions you still have on the matter. Suhail and Dhaval, thank you for sharing your contact details. If people have questions, they can reach out to you on the same. And so by the end of the day, we will be mailing all the attendees the presentation that you have seen today. We will also be mailing you a feedback form. We request you to fill out the feedback form so that we are more aware about your requirements and topics you would like us to cover in the future sessions. Also, please do refer us to any organizations you feel are fit to join the accelerator program. Please note that Atma representative will get in touch with these organizations referred to us. The deadline for application for the accelerator program is 15th July. Thank you so much for your participation. Thank you, Suhail, and thank you, Dhaval. Until next time, goodbye, and have a nice day.